This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
I do this stuff every day. I say the same stuff every single day. I know what to put on the page. So over the Christmas holidays, at the time, I forget what year, I sat down for 2 weeks, pounded out this book. And then obviously you have to go through a whole process of getting it published. But yeah, it was great because you're the only person in the market who has a book. And for whatever reason, if you are an author and you can hand somebody a physical copy of your book, your credibility goes through the roof.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Now, as you scale and grow your business, you need to apply the right capital raising strategy for your equity. Now, there is a difference between real estate syndication and real estate fund, and each have their pros and cons. Now, aside from that, you also need to get the audience to listen to your pitch and get them to invest. That's just as important. Now, our next guest knows all about these topics, knows all about syndication and funds. Now, he began his career over 14 years ago in real estate on the residential brokerage side. Now, it was then that he got the idea to write his first book. Now, once he released that book, he realized the true power of positioning yourself as a thought leader, as well as the power of adding value to other people as well. Now, from there, he went on to build on the idea of being an authority in the real estate space to reach the masses and to generate more revenue. Now, he's faced a critical moment in his life where he lost everything he owned to a former spouse, but he reframed his story and turned it into a victory. Now, today, he is a TED Talk speaker, a podcaster, author, and investor that continues to build his brand around real estate to get his real estate goals and help himself and help others get there much faster. Now, he's the CEO of Multifamily Real Estate Investments, Inc., and he is the founder and broker of Ferguson and Co real estate team. He and his team provide investment opportunities for high net worth individuals by acquiring and improving underperforming apartment buildings. Now, with all that, I'd like to welcome Seth Ferguson to the show. Seth, buddy, thanks for coming on, man.
Hey, thanks for having me. Excited to be on your show because I think it was 3 years ago you were on my show. So awesome to have the reciprocal guest spot going.
Yeah, excellent. Yeah, it's been a while, right? It's been a long time. Fellow Canadian too, so that's good too, right? All right, good. Well, guys, if you like what Seth has to say, you can reach him via his contact page at sethferguson.org. All right, so sethferguson.org. Okay, Seth, go ahead and tell listeners a little bit about your journey. How'd you get started with all this?
Oh boy. Well, kind of like you said, I was a real estate agent, right? Before that, I was trying to make the NHL as a hockey referee. So I was down in the States going all over the place, living out of a suitcase. Came back, thought working in real estate selling houses would be a good way to organize my schedule. You know, I could set my own schedule, as they say, and then work my hockey job and then work real estate. I was wrong with that. Real estate agents work a lot of hours. And then basically what happened was I made a lot of money selling houses. The income was coming in. It was going out just as fast. And I didn't really have anything left over. So I realized I had to start buying real estate. And that's when I started getting into the single family, duplex type of properties. And I couldn't scale. It was really tough. It sucked, actually. So that's when I discovered multifamily.
Yeah. Well, I mean, scaling single family is hard enough to begin with. And you're doing it in Canada at the time, right?
Oh, boy. Yeah. You need arm, leg, left kidney, firstborn child just to get a mortgage. It was really tough, especially in the Toronto area. Toronto area, you're basically breaking even, like you're neutral in terms of cash flow. And I remember one time the drain out to the sewer broke on one duplex, and the repair cost was $8,000. And that was literally like 3 years worth of positive cash flow. That was out the window just to cover the repair. So it was challenging.
Yeah, that's the part. One of the biggest hangups when it comes to single families, just if you have like one or two, is that one major mishap could blow out your entire NOI for the whole year. So it fortunately, air quote, fortunately, it was only just that, because if you would have blown out a furnace at the same time, you would have been negative. You would have been upside down for probably 2 years before you see any of your money come back out of those deals. That's why scaling, especially in single family, if that's what you're doing, is super, super important. Super important to scale this stuff as fast as possible. Yeah.
Huge. Like I tell everybody, I was equity rich, but cash flow poor.
Yeah.
I had so much equity in the properties, but with the lending rules, like you can't access it. So it made it incredibly tough to scale.
Yeah.
And it's so hard.
Yeah. Well, not to mention too, in Canada, having been, like I said, I'm a fellow Canadian too, so I know a little bit about what happens in Canada. They're fairly, I find that at least Windsor anyway, I think Toronto's the same way, very tenant friendly. It's very, very, very tenant friendly, to the point where it's disgusting, if you ask me.
I laugh when people talk about California and rent control. Yeah. It's if you think California's bad, come over to Ontario or British Columbia.
Right.
And right now, just to give you an example, the provincial government here, so that's like the state government, sets the allowable increase every year that you can raise the rents. In Ontario, inflation right now is out of control, right? We're filming this in the middle of July 2022. Inflation is nuts. 2.1% increase this year in terms of rents. So if you're a landlord, like that's not even coming close to the 9-10% that we're really seeing. And some are arguing the real inflation's higher. And then there's also people right now in the city of Toronto, in terms of municipal government, talking about not allowing landlords to raise rents once the other tenant moves out. So when you have a fresh person come in, the rent's frozen at the lower level. It's just absolute craziness.
That's insane.
Just nuts.
Yeah, the government is the government is your partner in those deals, whether you like it or not. So
yeah, it's madness.
Yeah, it is. But I mean, obviously, that was probably one of your motivations to start looking at multifamily. I mean, were you doing multifamily in Canada, or were you thinking about getting out of there and doing multifamily in the States?
No, I never did any multifamily in Canada. So what happened was my son was born, and that was kind of a big eureka moment for me. I'm holding my son. I want to do all these things now for my son instead of myself. And I'm like, okay, well, I know I've made the most amount of money I ever have actually owning the real estate, but I knew the single family, it was the wrong type of real estate I was acquiring. So I looked at office, industrial, retail, self-storage, mobile home parks, multifamily. And multifamily really struck a chord with me because I looked at how it performed over the past couple of recessions, rock solid. I looked at, just the basics of people always need a house. And we saw that over the past couple of years. People will work from home. People will close the doors on their shops, not go into the office, but people always need a place to live. And that really drew me to the multifamily side. Plus, with my experience with the single family stuff, it's something I could grasp my head around. It's just on a much larger scale. So I started looking in the U.S. So many advantages of investing in the U.S. Larger markets. You look at markets over 1 million people in Canada. We're very limited. Right. We are basically like a drop in the bucket compared to the behemoth that is the United States. So I think a lot more opportunity. You go down to the southeastern U.S., you're not dealing with snow. You're not dealing with, you have hurricanes once in a while, but a different type of product and a different mindset too in terms of, what tenants are looking for, how people live. Very, very different.
Yeah, absolutely. I mean, that's one of the reasons why many friends ask me about buying stuff in Canada. I would never do it for those reasons. It's hard to leverage, to put debt on assets. Very, very hard to do. Maybe if you know the rules, it might be easier, but I don't. But it certainly the rules here in the States don't just easily apply there. But not to mention, I think most important aspect is how the rules of law really favor the tenant as opposed to the landlord. It's just not worth it. It's just not worth it. Even doing a large asset, it's not worth the hassle. So might as well stay away from
that. But plus you get into the tax code, with bonus depreciation, everything that you enjoy in the United States. That like the very different setup here in Canada. And I know the rules on both sides of the border, and I would definitely go into the US if I'm looking to place some money there.
Right. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me. So let's talk a little bit about syndication, because I think you can syndicate here way easier than over there. I think, and you touched on that a second ago in terms of the behemoth. Like there's a way more people here that are interested in investing in assets, because there's 300 some million people here in the States. In Canada, it's like 30 million, right? It's like literally less than 10%.
I think we're like 50 something million now. So yeah.
Oh, okay. All right. Wow. So it's still like basically just over 10% of what America has for population. So, but still, I mean, I have to imagine that, syndicating deals, setting up a fund is way easier and far more lucrative to do it here versus in Canada, right? Yeah.
Well, I think first of all, you just have to look at the amount of capital looking for a home. In the US, you have such a larger base to draw from. And then we go into the types of offerings. In Canada, the securities are governed provincially, so that's at the state level. And each province is slightly different. In the U.S., obviously, you have your federal and then you have your state laws as well. But for instance, if somebody in the U.S. wants to do a 506c where you can publicly advertise your opportunity to accredited investors, that doesn't really exist in Canada. So it's a different way of going about it. In Canada, if you're looking to advertise an opportunity you're offering, it's a very, very expensive undertaking because now you actually have to publish a prospectus and go through all the legalese with that. And it's very time-consuming and costly. So I think in terms of the exempt market and accessing the exempt market, the U.S. Is certainly favorable in that respect and gives you a couple legs up.
Yeah. Now, I know we talked a little bit about syndication and a fund. Maybe for those people that aren't familiar, let's talk about syndication first. What is a syndication? And we can go into what is a fund and what are the differences between the two.
Oh, sure. And feel free to chime in on this too.
Sure. Yeah, I know a little bit about both too. So yeah.
Yeah, just a little bit. Yeah. So syndication is a great structure to use on a project by project basis. It's basically like a one-off project. So Wall Street does one thing really well. They raise a whole lot of money and deploy it. And so a syndication is really a Wall Street construct. So what it does is it pools the resources of a number of passive investors called the limited partnership. And these limited partners will invest their capital with somebody called a sponsor, a general partner, who has the real estate track record, the experience, the team, the deal flow, the know-how about real estate. And what that does is it allows these passive investors to invest their money with somebody who knows what they're doing and actually experience a number of benefits and protections under the law. For instance, if you and I would do a joint venture, a 50-50 split on a duplex, both you and our risk is unlimited, right? Like, it doesn't matter if you're signing on the loan or if you're bringing the money. Our risk is totally unlimited in that deal. So if something goes wrong, if I go belly up, they're coming after you. With the syndication, your risk is limited as a passive investor. So it's a great way for somebody to invest money into a syndication, participate in deals that you otherwise wouldn't be able to do on your own, and really get the tax benefits, the cash flow, the appreciation, the stability that multifamily provides. Now, when we switch over to a real estate fund, think of an entity that's growing, that has a lifespan of its own. So with the syndication, you're on a one-off deal-by-deal project, whatever it is. With the fund, you're investing in what's called the fund criteria. So an example criteria could be Class B apartments in the southeastern U.S. So you would invest your money in that fund that has that criteria, and the fund manager will go out and action that. But your money is diversified across the entire fund. So the fund may acquire 3 buildings and sell 1, then acquire another 4, then sell 3. And it's going to grow and expand. And your money's working in the whole fund. The advantage of that is you invest once and you can keep investing in the fund and you get that diversity. Though comparing it to the syndication, if you're somebody who wants total control of exactly where your money's going, with the syndication as an investor, you get to decide, well, hey, I like this deal, I want to invest. I don't like this deal, I'll wait for the next one. With a fund, you're investing in the fund, and then it's the fund goes out and deploys your money as they see fit. So I'm not sure if you want to add anything to that, but that's kind of a fund and a syndication in a nutshell.
Yeah, I think the only thing I would add when it comes to a syndication, you're targeting one specific asset or group of assets up front. So everyone knows what it is they're throwing down for. Everybody knows that, okay, I'm going to put down $100,000 to buy this specific group of assets located in this location, and this is the plan to fix it. And here's what the rents are going to be today. Here's what the rents are today. Here's what they're going to be in the future. Here's the expected return. That's it. So it's kind of like it's already predetermined. And one thing I also like to add too is that syndication is one of those things that's used everywhere. Not just on Wall Street. Movies are syndicated. If anybody's ever watched a movie, they see all these different studios that are part of brought to you by this company, this company, this company. These are all companies that put up money to make this movie happen. So syndication is a very popular way to bring projects to a fruition. Where a fund, at least our fund anyway, the ones that we have, I think it's very similar to what you guys are doing. It's like a blind pool, right? So it's kind of like, in our case, we're buying net lease assets. So we're going to buy net lease assets in these types of net lease assets in these types of locations for these. This is generally how big they're going to be, but we don't know. But generally, this is how it's going to be. This is what the expected return is going to be. So everything we go and buy has to fit that criteria before we can actually buy it. So yeah, like I said, though, each one of them has their pros and cons, right? It's certainly tougher to raise money for a fund, I would say. Especially your first fund is very, very hard, right? Because it's like they have to really believe that you can pull it off, as opposed to a deal like a syndication where the deal's already been defined. So it's kind of like everybody knows, everybody's already visualized, oh, there's the building, that's what we're going to buy, right? So that's probably one big I don't know if that's a pro or a con. I guess a con, right?
Well, it all depends on your use case, right? Like, if you have a one-off deal that you come across, you'll probably syndicate it because that's the best fit. But if you are planning on wrapping up a number of properties in a given area, that's a perfect application for a fund. And both do things incredibly efficiently. It's just you have to apply the best use case to the situation at hand. That's right.
And I think that, like I said, I think the use case is what defines everything in terms of the ability to raise money, which is, and that's something that you learned early on too, I think with your first book that you did, right? To try to start raising awareness of real estate, and I guess also position yourself as a subject matter expert, right? Kind of helped you with that too. I'm sure it's helped you to even get to where you're going now. And we talked in the green room a little bit about some of your upcoming events too. So you've come a long way since that first book, right? So maybe talk a couple seconds about that first book. Like maybe tell listeners a little bit about what was your idea? What did you do up until that point to even create a book? And fast forward to what you're doing today and how that impacted what you're doing now.
Yeah, so the very first book I wrote wasn't even to do with multifamily. That was back when I was still a real estate broker. And I'm like, you know what? Like, what would be one way to kind of separate myself from the pack and, have some sort of lead magnet, so an item of value that you can give to prospects. And I'm like, you know what? I should write a book. I do this stuff every day. I say the same stuff every single day. I know what to put on the page. So over the Christmas holidays, at the time, I forget what year, I sat down for 2 weeks, pounded out this book. And then obviously you have to go through a whole process of getting it published. But yeah, it was great because you're the only person in the market who has a book. And for whatever reason, if you are an author and you can hand somebody a physical copy of your book, your credibility goes through the roof. So if let's say you're trying to pick a broker to work with, one has a book and has been interviewed many times, appears in the media, is a subject matter expert, and everybody else is just regular Joe Blow broker, obviously you're going to see more value in going with the subject matter expert. And you don't have to write a book. You can have a podcast. That's how I started too. I started a podcast. You can be in the media, so you can write articles for newspapers, publications. There's so many different ways of thought leadership. You just have to choose the one that works best for you. But the book was great. People love books. Writing books is hard too, so that your competition significantly diminishes because it takes so much time and effort and dedication to do. You can start growing from there. And we can get into the other stuff too if you want.
Oh, yeah, no, absolutely. So, obviously, I think you did a couple other books too after this one, right?
Oh, yeah, we've got a bunch on the go, yeah.
I want to take a pause from today's show to share something that I've been encountering. As I speak to many investors, there's this concern. And the concern is centered around the inflation we've been experiencing and the devaluation of our currency. Now, we've seen some of the highest inflationary periods over the past 30 years. That's up over 8%. Economists actually believe that inflation is closer to 20%. Some say it's even more. Now, what does this mean for you? Well, it means that money that is sitting in your bank account or self-directed IRA that's not invested in physical assets that hedge against inflation are losing buying power. That means that every minute, every second, that dollar is becoming less valuable. You see this every day. You see this in the groceries you buy, the gasoline you buy, everyday items that you're buying on a daily basis are becoming more and more expensive, and you're using a less powerful dollar to buy these items, meaning that dollar is losing value if it isn't put into a property that produces cash flow, just like real estate does. Now, our team here at Bulletproof Cashflow has put together a series of weekly webinars that cover real estate investing like multifamily, net lease, and real estate development. Now, these are purely educational webinars. In these webinars, we talk about why real estate offers a powerful opportunity right now and why it makes sense to invest in these assets today. So, if you're interested in real estate or want to have the opportunity to get involved as a hedge against inflation yourself, I encourage you to go to bulletproofcashflow.com/webinars. That's bulletproofcashflow.com/webinars. Now you go there, these webinars are 45 minutes and they cover different topics every week. We go over the things you need to know to avoid some of the common pitfalls when it comes to investing while getting you prepared to invest your paper dollars into a real physical asset. Now, if you can't make the webinars, just go ahead and register and we will send you a recording that you can watch at any time. And by the way, these webinars are entirely free. There's no cost to you. This is just something that we do to educate our folks out there. So if you're enjoying this episode, please like and subscribe to Bulletproof Cashflow. It helps the channel tremendously when you do. Now let's go ahead and get back to the show. Yeah. But now it's like you've changed it now. Now you've leveraged more into a speaking platform as opposed to just doing books, right?
Yeah. So what happened was, you had kind of mentioned in the intro about, a worst case scenario happened to me with a former partner. So basically I was building again from literally ground zero. I was totally wiped out. And the very first thing I did was I started a podcast, and that was great because it taught me how to speak. It taught me how to ask questions. It got me connected with other people in the industry. And then I used a podcast, got a cable TV show here. I knew nothing about cable TV shows, but I pitched it and I got it. So I had the podcast running. I had the cable TV show. And, when you talk with prospective investors or whoever, if you say, hey, I have a TV show, that gives you even more credibility when you're speaking with them, because not many people can say that. So now I had a book, a podcast, TV show. And then we actually put the podcast on ice and switched over to YouTube because I found YouTube, the leads and the inquiries I would get were stronger with YouTube. And again, competition, most people can't do video, so they do a podcast. So again, my competition in terms of YouTube, I lessened my competitive pool with doing the video. And then recently we graduated to running like major international events. So we ran something called the Multifamily Conference this past May. We had Kevin O'Leary from Shark Tank as the keynote speaker. Joe Fairless came in. He's got $2 billion in multifamily assets. So we had some really cool people there, and we're running it next year in 2023 in Toronto. And we've got Grant Cardone, Alex Rodriguez coming in, some other big names. And that just took it to a whole nother level. So now it was really amazing, actually. I wasn't prepared for it. I had an inkling, but I wasn't truly prepared. The number, like when you start running an event at that scale, you become the person people want to talk to. Just people came out of the woodwork, out of nowhere, and all of a sudden they want your attention. And it was a little unnerving because I was basically bombarded on a daily basis with people wanting to get in touch for whatever reason. And that was pretty cool. And I think like the cool, like we all, with this podcast, you've got people listening and you've made a huge impact in their life by the information you put out. I wasn't prepared for the feedback after the event. Literally hundreds and hundreds and hundreds of DMs, emails, messages from people just talking about the impact that event had on their life and how they're switching gears, how much it helped them. That was really cool. And a lot of times, if we're talking about YouTube or podcasts, we don't get that interaction with people. Like people can leave a comment, but having the volume of messages, I did not expect that at all. And that was pretty neat to see. Yeah, I went on a bit of a tangent there, but yeah.
Well, no, but no, it's fine though, because I think one of the key aspects of these the events, especially, it's the same thing with the book. It's the same thing with everything you mentioned. It's about getting reach. It's about getting in front of people to get people to the top of the funnel, so to speak, right? To get that lead in the door. So eventually, you know what? If somebody wants to possibly invest with you, great. They get to know you. They get to understand who is this Seth guy? What is he about? He's got his materials. He's got a show on YouTube. He's got his cable show. Now he's doing events. Great. I like this guy. I want to invest with him. Or maybe it's the other side of the spectrum where it's like, you know what? I'm going to learn from Seth and I'm just going to do my own deals and I'm just going to be perfectly fine doing that. Either way, you're helping people and you're getting some reach too at the same time. It's a great way to really help others get to their goals, right? Which is that's a big deal. No, it's a big deal.
Yeah, and one thing I heard a stat at some point. I forget where I heard it, but a prospect will engage with your content about 7 times before making contact. I would love to cite the source, but it escapes my mind.
Yeah.
So when I'm thinking of, okay, well, what are my lead magnets? What kind of content I'm producing? I always have that in the back of my head. Okay, so if somebody wants to learn more about me, they can watch a number of YouTube videos. They can then buy one of my books. Then they can attend my before they even place their capital with me, they can experience so many different ways. And some people are really like the audio podcasts. Like somebody like myself, I enjoy video, so I'll more likely watch a video of somebody. But you need to have a couple different ways for somebody to interact with you depending on their preference, right? Like I would never just listen to a podcast. Like that's not what I do, but I'll watch your videos. So yeah, like I just try and have a mix to accommodate everybody. Now that being said, if you're starting out, focus on one and do it really well. But then once you kind of master that, like I did with the podcast, then you branch out and add a TV show. Once you get that rolling, then you add something else. And then you can build your team underneath it too, because you need a support team to really handle all the different stuff you're doing.
That's understatement of the day right there. You need a team. Yes. Absolutely. I think that the team is a real big part of the success, because it's just to do everything you want to do it's extremely time consuming. Certainly writing a book is hard enough. I think you said 2 weeks to write that one book. And you're working probably around the clock is what you were doing when you're doing that book too, right?
Yeah. Though I will say though, like I I was a pretty experienced real estate broker when I sat down and wrote the first one. So I basically took what I talked with people about every day, and just as I was talking, I would be typing. So, if you're somebody who knows your subject inside and out, the book's inside of you. And what I found too, which was really interesting, organizing it into book format actually helped me speaking with clients after that, because you see the trend of your thoughts. You're able to segment those thoughts, and otherwise, before I wrote the book, I may have not seen the connections between all the different facets and components. But having done the exercise, put it in book format, organized my thoughts, it made me a better speaker or educator when I was talking with a prospective client. So, whichever niche you're in, I think running through the book process will actually make you a better salesperson at the end of the day, and a better communicator.
Yeah. Yeah. No, I think that, even if someone's listening out there and they don't even want to have a blog or they don't want to write a book, but even just writing things down would help with your pitch, right? Because everything, the pitch matters. It's like laying out what you're going to say and how you're going to say it before you actually speak to somebody is probably one of the biggest things you can possibly do to go and talk before talking to a potential investor. What I also like to do is if you're brand new to this and you're trying to learn how to talk to people, try doing some burners, meaning try talking to people they'll never invest with you ever, right? Ever, because they're broke or whatever the case may be. Go talk to them and see if test it out first. Test with them, and then that way you don't burn up a good lead with a test. So that's just something I did when I was starting out a long time ago. But I don't know if you have any advice on that one, Seth.
Yeah, you know what? I think you mentioned writing it down. I think everybody needs some sort of framework. Yeah. So let's say, for instance, you're a value-add investor, right? What's the process you actually run through in your deal, right? Everybody will have their own unique spin, but you can turn that into a book, or you can turn that into a white paper. You can turn that into a YouTube video. So next time you're speaking with an investor, it's hey, let me walk you through my 5-step process of turning deals like this around. And I found that people, when you turn it into a process, a method, a framework, it's really easy to digest. And people like those steps. That's why you see 3-step processes all the time, because it's easily digestible and people can relate to it. And I didn't do that for the longest time. And once I started doing that, I have a process or a method for everything. And it makes things so much easier.
It's funny because people like the number 3, 5, 7. Those 3 numbers. If it's 6, it sounds weird. If it's 4, it sounds weird. If it's 2-step process, it sounds very, very strange. So I learned that a long time ago too. With when I used to be a trainer of technology stuff. We're talking 25, 30 years ago, probably longer than that actually. So it's been a while, but yeah, that's right. I think that, but even putting those, having a process defined and using it in one of those odd numbers, it helps solidify that. Oh wow, these guys know what they're talking about. There's a step for it. It's a process for it. People love processes. They love processes. Yeah. Absolutely. Cool. Well, we covered a lot of stuff here today, Seth. What sort of bulletproof advice would you have for someone listening right now?
Ooh, well, I would say, I'm sure you find this all the time too, but, with all the events and stuff we do, people will come talk with me and they'll say, hey, I'm looking at doing my first deal. And then I see them a year later and they still haven't done their first deal. And then I see them 3 years later and they still haven't done their first deal. Just go ahead and do your first deal. If you're on the fence, just hop in and make it happen. That it sounds so cliche and I hate saying it, but it's so true. And I'm sure you find people too, you'll come across them. They're all full. They're full of piss and vinegar, and then they just don't do it. And that drives me nuts.
Yeah, it's you have to take action no matter what, and that's part of the hardest thing, because I think many people get comfortable doing the same thing over and over again, and or they put it off to tomorrow. Oh, tomorrow I'll do this. Tomorrow I'll do that, and tomorrow never comes. It never comes. So you got to take action. You got to take action today, and even if you think it's going to be painful, it's funny by the time you get through it, you realize it wasn't actually all that hard.
Exactly. Or your brain will trick you and tell you it wasn't as hard.
That's right.
So,
That's right.
Yeah.
That's right. Well, good. All right. Well, guys, if you want to reach out to Seth, you can reach him via his website at sethferguson.org. Hope you got some insight on, of course, building credibility, getting in front of people, but of course, even talking about some of the differences between syndication and what a fund is too. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, head up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.